I'm Ryan Iverson, and this is the Investor Breakout Weekly Insight. Let's talk about what happened this week. Japan's currency might seem like a niche story, but when the yen moves, global markets feel it. And it all comes back to the yen carry trade. Borrowing ultra-cheap yen and investing it in higher-yielding assets abroad. That rate gap is the carry. And when the yen is weak, this trade sends massive capital across global markets. But when the yen strengthens, or Japan raises rates, those trades can unwind fast. Investors run to buy yen back, dump risk assets, and volatility spikes. That stress hits everything: stocks, commodities, crypto, and squeezes Japan's major exporters, dragging down the Nikkei. Now, why should you care? Because an unwind doesn't stay in Japan. It can ripple through global markets, especially if the yen keeps climbing. With Japan's monetary policy meeting coming up in December, any hint of policy change could trigger these carry trades to unwind. Instead of chasing risky carry setups, many investors are zooming out. Japan's own economy is showing real signs of structural growth, wages, corporate reform, and a stronger domestic story. And with the Fed's next moves still uncertain, the yen's path could reshape where global money flows next. Bottom line, a yen spike isn't background noise. It's a signal that the market's pressure points are shifting. Prime Minister Mark Carney and Alberta Premier Danielle Smith are set to unveil an energy deal in Calgary. It includes a memorandum of understanding on a heavy oil pipeline to BC's northwest coast. BC Premier David Eby says he was caught off guard. He raised concerns about including coastal First Nations in talks. He also wants tanker ban maintained, and he wants federal subsidies for BC projects to match Alberta's. Eby warns that northwest waters are dangerous. A spill could devastate fisheries, tourism, and local communities. The pipeline is part of Alberta's push to expand energy markets. Ottawa says the memorandum negotiations are going very well with Alberta, but the federal government stresses projects need provincial and First Nation support. Costs are estimated at $20 to $30 billion. No private builder has stepped forward yet. The deal highlights the tension between economic ambition and environmental and Indigenous concerns. Some companies don't surprise the market, they just confirm what the sharpest investors already saw coming. Trubar TRBR on the venture is exactly that story. Back in January at the CEM Alpha North Capital event in the Bahamas, Trubar, then still known as Simply Better Brands, was named a top pick at the Investor Breakout Exchange. And even then, the story was clear. A messy portfolio was being streamlined, the company was focusing on one breakout brand, and momentum was building fast. That focus paid off. Trubar, now a rising force in the better-for-you snack category, became the centerpiece of a lean, disciplined turnaround. One strong enough to flag the company as a future acquisition target months before any headlines landed. And now, the call has been validated. Trubar has struck a premium buyout deal with global snack giant Igartha, a strategic suitor with decades of experience scaling household brands. It's the kind of outcome that shows why top picks matter. The signals were there early. The market is catching up now. Trubar's journey from restructuring to brand focus to strategic acquisition is the exact arc investors look for: clarity, momentum, and a finish line that rewards conviction. And it all traces back to an insight first recognized on the ground at the CEM Alpha North Capital event. Want to hear more about the Trubar success story? Sign up at theinvestorbreakout.com. I'm Ryan Iverson, and we'll see you next week.